evening, everyone. On behalf of DAM Capital, we welcome you all to Q4 FY24 conference call of Ramco Systems. We have with us Mr. Abhinav Raja, full-time director, Mr. Subramaniam, CEO of the company, Mr. Sandesh Bilagi, Chief Operating Officer, Mr. R. Ravi Kulachandran, CFO, Ms. Gayatri, VP Finance, and Mr. Vijay Raghavan, Company Secretary. I'll now hand over the call to Mr. Abhinav for his opening remarks. Thank you, and over to you, sir.
Good evening, and thank you everyone for joining the Q4 FY24 earnings call. As you might have already read, we've announced our financial results last evening, and we'll go over the results and highlights on the call today. We reported a revenue of $63.92 million, and the global consolidated income of Ramco Systems Limited was $64.41 million, or about 529.9 crores rupees. In the past few quarters, we've been indicating that we'll take all our efforts to get the company back to EBITDA profit and positive, and consistently improve the bottom line from there. And we're happy to say that in this quarter we have turned EBITDA positive, and we will aim to also maintain it the coming year. Our emphasis on innovation is helping us build transformation and drive future growth. One of the significant milestones this quarter and year was the launch of Ramco Pace. It's a modern SaaS-based platform which is gaining good traction and showing promise in various markets. Till date, we've had over 13 events across India, Asia, Australia, New Zealand, Middle East, where Ramco Pace has been demoed to several customers and prospects, and we've received tremendous response and a lot of demo requests to this. This is a testament of Ramco's commitment to innovation and excellence in payroll. Additionally, we've also secured a record multi-million-dollar deal, which is one of the largest deals in the history of Ramco Systems, signed with Korean Air. This strategic engagement will accelerate tech transformation of Korean Air's new engine maintenance facility, which would be Asia's largest engine MRO facility. Our commitment is to bring in rapid technology modernization across all our offerings to ensure we have the best-in-class design enterprise apps with the best user interface, embedded with generative AI, along with a rich feature set as well. Ramco focuses on offering an enhanced, scalable and stable platform, thereby aiming to ensure there's good client satisfaction and good business agility as well. With this brief background, I'll hand it over to Sundar to walk you through further details.
Thank you, Abhinav. Good afternoon, everyone, and thanks for joining this call. Let me quickly take you through the company's performance over the quarter and the year. As Abhinav already mentioned, the revenue stood at about $63.92 million, and also we turned EBITDA positive last quarter. Despite challenges and headwinds, our recurring revenue grew at a healthy pace of 13% year-over-year compared to 5% last year. Q4 witnessed a 19% year-over-year increase in order bookings from $23.41 million to $27.9 million this year. Our unexecuted order book stood at a healthy $188 million, giving us a good start to the next year. Our cloud orders that are primarily subscription-based SaaS solutions continue to grow at a healthy pace, and with a 60% revenue recorded from the cloud or SaaS customers. This really forms a part of our recurring revenue. We signed 11 deals over the year, over $1 million, and in Q4 we added, as we mentioned before, the Korean Air deal, which is a very large deal for us. On partnership and alliances front, this year witnessed the onboarding of Deloitte and BDO as our key strategic partner to redefine the payroll landscape, and we continue to work with them very closely, getting into the market. Our turnaround efforts are underway, and we are beginning to see positive signs of progress. EBITDA turning positive is one such. Our strategic direction will remain focused on platform modernization and transformation. With our rich and extensive IP and the power of SaaS-enabled platform, we continue to offer cutting-edge technologies and swift deployment, thereby delivering excellence. In closing, I want to mention that our customer centricity, our focus on operational excellence, and the new product line such as Pace will bode well for the future. We are confident that our growth plans and strategic directions drive significant value for our stakeholders. And thank you for your continued support. I have nothing else to say. We welcome your questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes.
Yes. So first of all, congratulations on turning EBITDA positive. So my first question is with regards to the Air Korea order that you've gotten. You said it's our biggest order in one of the history, and you said it's $2 million. I know you usually don't give numbers, but if you could indicate as to whether it is a sub $5 million order or north of $5 million. Secondly, if you could also indicate what sort of timeline would we see this revenue trickling in or something of that sort, just so that we can get a sense of how MRO orders will work in the future.
See, Korea is, we said it's the largest order. It is to the north of 10 million. Let's put it that way. We don't want to give an exact number. We don't give, but when we say it's a large deal, it's north of 10 million. But again, that is not indicative of all the MRO orders, right? It depends on what kind of the product implementation that we contract do. So this is fairly large, and this is north of 10 million.
Right. And the execution timeline, if you could give us a sense of how that revenue should trickle in.
Yeah, typically our execution timelines, including the AMCs, would really we'll be looking at 5 to 7 years. That would be the indicative timeline.
And that would be front-ended, right? Like I'm assuming the first 2 years would be maybe 40% and then 15-20% going forward later on, or something of that sort.
It is structured in a very similar way, but not exactly with those numbers.
Right, fair enough. I understand that. Also, sir, secondly, we've launched Pace recently. Congratulations on that. My question is, have we been seeing a lot of traction in Pace? I know it's only been maybe 2.5 months or so since we've launched it. But what sort of traction have we been seeing? Anything on that end?
So in terms of, there are differently two parts to it. Right now we are doing the road shows, and we have done close to around 9 road shows across the world, including 2 in India. We have done it in Australia, New Zealand, actually 13 plus. Even yesterday we had completed one. So many road shows. It has been received very well by the participants, and in fact the number of demo requests have been significantly high. And so that is a very clear indicator of the future of Pace. The amount of interest and the amount of the kind of the feedback that we really got from those events have been phenomenal. So, but it has to convert into the deal. So right now there is a very active interest in demos, and we are doing those demos to those customers at this point of time. What we could have done over a period of 2 years in terms of active marketing and selling those kind of demo requests, we have got this in this roadshow event because of the superiority of the product.
And just to add, I think the conversations, given that we deal with mid to large scale enterprises, typically it takes 2 to 3 quarters before it transitions from demo to possibly, orders and then revenue as well. So you'll only start to see this post stage 2.
Right. Sir, thank you for your answer on that. Just one last question, coming back to the MRO end of things. Now that you've received such a large order from a flag carrier and a national carrier, etc., and it seems fairly large, I'm assuming, by your size. If you could just give me a sense of, are we seeing more traction in terms of MRO orders now that we've landed such a big client? Like, is that working in terms of the advertising benefit that we get from having such a large carrier on our clientele list?
Yeah, I think it is both yes and no question. The reason is that, see, if you look at our payroll market, payroll is a very horizontal market. So which means that we can, any customer in any industry is essentially our customer, prospect, right? That is something we can always do. But whereas this airline MRO, right, particularly in engine MRO and airframe MRO, are very niche fields. So not that there are too many operators there, but we have seen a lot of active interest. This is based on the solution that we have at this point of time. So we do see an active interest. I think the market potential is pretty good, but the number of opportunities that we are chasing are few, and they look pretty good.
Right. Thank you, sir. I'll get back in the queue. Thank you so much.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask the question. Next question is from the line of Dhananjay Vagrodia from ASK Investment Managers. Please go ahead.
Hi, management. Thanks for this opportunity.
Sir, sorry to interrupt you. Can you speak through your handset and a little louder, please?
Sure. Hi. Thank you for this opportunity. So what I gather from the channels is that you all have now revamped your product. You all have done the hard work of now getting the product up to date. So how are we seeing in traction? I know it will take time, but how are we seeing traction? And would that be something where we would see fixed costs be similar, let's say, this year and next year, but the J-curve hockey sticks growth which we'll see with more customers, that would be significant for us? Is that something we're looking at?
That is something that we are expecting at this point of time. But remember that we are in very initial stages. And as we told, the road shows were very good. 13 plus events went very well. The demo requests have been very good. A B2B cycle is typically 6 to 9 months for somebody to decide. So by the end of maybe the next quarter or possibly into the H2, we will get to know what kind of traction that we will have in the market with this piece. That is number one. But in terms of the fixed cost, we have done multiple things. One is that you have seen our EBITDA getting positive because we have reduced a lot of the costs that we really have. That is number one. And second thing is that by onboarding partners like BDO and Deloitte, we are also looking at primarily how do we really expand our market, how do we go reach to more customers without really adding more sales and marketing to our effort. So that is also working pretty well. And but we will see the real momentum going into the Q3 of this year.
So, coming to that, just to understand now with the likes of BDO and who you've done a contract with, how does the contract work in terms of sales expense? Because do we do a profit share with them? Is it a revenue share, or do we book it up on our cost? How does it work?
It is more a very simple contracting model because they provide services to their end customers and they do have contract with the end customers and we have their price point to BDO or Deloitte. That is one model. The second model is that, we provide services to the end customer, and in the countries where we don't have a presence, they provide services. So it is a very transparent model and very simple model. It's not too complicated by any means.
Fantastic. And lastly, how has our sales force been in terms of now revamping them with the newer product? Has that all training been done? Do we have any more additional expenses on that part?
We will have additional expenses. We have provided for additional expenses, but again, with our partnerships and the road shows, I think we have a hugely optimized cost with respect to that. So to that extent, what we have done is that we have spent what is really necessary, but we have really expanded our market presence.
Okay. And we'll also be very selective in terms of which markets we'll add more sales folks as well. We don't want to expand too aggressively into new areas because we think the depth is quite large in our existing markets itself. The overall payroll market is over $50 billion globally. Right? We are still, a very small company compared to the whole size. So we will first ensure that the first 12 to 18 months we get good traction in the existing markets, and then we can always explore new territories for further growth. So to answer your question about when can more aggressive growth come from, I would say since we're in the turnaround journey as well right now, I would say it will still take another 12 to 18 months to expect any accelerated growth. Right now, it's all about EBITDA and cash control, making sure that we remain profitable as a company.
Fantastic. Lovely to hear, reassuring to hear. And congratulations on a very, very good product. The channels have been praising it very highly. So congratulations again.
Thank you.
Thank you. Next question is from the line of Vivek Kumar, individual investor. Please go ahead.
Am I audible, sir?
Yes.
Hello? Sir, my question is on this MRO deal. So, if you take away that deal, can we maintain what is the basic traction that you think you can maintain in this defense thing? Although 1 year back, we were told that the defense opportunities in US. So, if you can give some commentary on these two things, like our order winning traction in defense, where are we seeing opportunities in aerospace and defense, and US defense opportunities, these two things. Because it's such a big order, if you take that away, how is the traction?
Yes. Last quarter, we had already, that time, we said that it is the focus we were into the heli segment, which is the smaller segment, and we are pouring into MRO and as well as the defense-related area. And that was the guidance we had given, and from the defense usually takes a very long gestation period. That time also it's around 18 to 24 months, what we are seeing. And right now, MRO has moved faster than others because this is in the non-defense area. So this has continued, and probably more of the opportunities what we are seeing, serious ones are in the MRO area, and we will see how our defense strategy works out. But the other deal which we had announced at that time, General Atomic, which is gone live as per the plan. So that is the one color I can give. So we are seeing how it is progressing.
You're still positive on US defense because you have invested fairly there. So I'm just saying.
We have not significant investment. It is the we had our office and subsidiary which we have created from the structural perspective rather, not from the lot of investment we had not put there. But we knew it is going to be taking long term, and we are just seeing that. And it's also seasonal. The spending coming from the government and other multiple factors which will determine that. But currently, as we stand, we are more bullish on the MRO side.
Yeah, and also one other thing to add is that we have the same product that can cater to different segments. We don't have to go and build it again. So if we have an engine MRO that can really cater to the civilian structure, that can cater to the government structure, so our product is that robust. So that is the power of the product. So at this point of time, wherever we are seeing opportunities, we are pursuing those opportunities aggressively. And while we pursue all these opportunities aggressively, what can really help us in terms of refining and making our product more rich. So that is what we are really looking at.
So if I can take a 2 to 3 year view, what are the products you think will drive our order booking and sales, and which are finding traction? Which markets and which products do you think are going to drive sales growth?
Yeah, as an organization, right, and since we are in, as Abhinav mentioned, we are in the turnaround process, and turnaround journey takes time. But having said that, we are not really focusing on the market as absolutely payroll is number one, because payroll is a large market for us, and in terms of it's a very horizontal market, and we are present in that market, and we see an opportunity to grow. So that is undiluted focus. That is number one. The second one is that with respect to the aviation, wherever we are in heli, that can be really rolled out in other countries. Heli is there. And the MRO is an opportunity. This is a very niche product we have in this segment. We have built this product already. It will be launched sometime pretty soon. But the point is that we will focus on this. So we keep, as an organization, we keep our focus on these two industry verticals. But having said that, there are other industry verticals also we are present. So where we are doing what we said in our script, primarily we are looking at the modernization while we could keep modernizing the other pieces, other products that we have. So I would say that these two are very high focus, and while all other things are getting modernized and refined. So that's how we really look at it. We don't want to really focus on too many things at the same point of time.
Okay. Thank you. Thank you.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Harsh Muchandani from Chris Portfolio. Please go ahead.
Thank you for the opportunity. Wanted to understand, this year, where do we target in terms of execution of the order book, and can we expect the EBITDA to reach double digit again this year, or it would take longer?
We don't want to we don't want to make any forward-looking statements, and we are very cautious at this point of time because it is also a year of turnaround. We want to make sure we make all the investments, we continue to deliver excellence to the customer, we continue to modernize the product. So we think we will stay a bit positive, but beyond that, we don't think we can really give any forward-looking statements.
Okay. And also wanted to understand between the standalone and consolidated numbers, there was a good growth on the standalone business, and overall numbers were flattish at a consolidated level. So is there something which has moved between the businesses? And if you could help us understand what is driving the standalone number more than the consolidated number.
The standalone number considers the intercompany transactions between the subsidiaries, parent company and subsidiaries. We charge them for the work being done from Chennai on the offshore basis. So that will make a difference between the consolidated number and the standalone numbers.
But it's a better view to see everything as a consolidated because they are not very independent from that perspective. So our business is interlinked all over. So better way to look into the result will be the consolidated one.
Okay, fair. And just last one more question. We closed the year at almost more than 500 crores of top line. So out of this, you said 60% of the revenue was SaaS related. So is it on the entire top line or some subset of this top line for the year?
Can you please repeat? What is that? 60%?
So out of 526 crores top line, what revenue is recurring in terms of your SaaS revenue-led revenue, and what is the implementation or one-time revenue split?
Yeah, it is mostly from whatever we get, that 60% is from the cloud orders, which could be in implementation, it could be in the subscription, it can be a lot of things. It's based on the cloud-based deals that we really go to the market with. So it is from that. And that you are seeing a steadily increasing pattern. And for the subscription, if you want to really look at it, you have to look at it up in terms of the ANC or subscription back, which is also showing a steady, healthy growth. The recurring revenue is showing a steady, healthy growth. The cloud orders are also showing a healthy growth.
Yeah, recurring order, if you see in our fact sheet, recurring revenue, what we have given, it is pure recurring revenue and it doesn't include any services there.
Yeah.
And our 40-30 crores is about 320 crores. The recurring revenue is 320 crores. We want to correct the number.
Okay. So out of 526, 320 crores is recurring revenue. That understanding is correct, right?
Yes. Correct.
Yes. Okay. Thank you so much.
Thank you. Next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah. Good evening, sir, and thank you for the opportunity. My question is regarding this Korean Air order, which is upward of 10 million. Can you tell me what has changed after that, and what will be positive for us after this? We are more visible to the other big airlines in terms of MRO. If you can give some
I think
that.
Yeah. Yes. So I think if you really look at it, it is one of the largest airlines in the world, and it is very reputed. And when they made a selection based on a complete due diligence, they spent a lot of time with us. They made the due diligence, they played around with the product. They made sure that it is robust, and after that it has been chosen. So when someone like Korean Air chooses us, and it gives the extra credibility in the market. So other people who are really looking at it will absolutely look at our product because it has been chosen by someone like Korean Air. So that has made a very big difference. Right now we are focused on executing it. So that is our immediate focus in that right now.
And sir, are there any performance benchmark on that order? Suppose if you are not able to do it, the order would be cancelled or reduced or something like that?
No, I think we do have SLAs, and they have SLAs in terms of how to really help. it was a good contract that we really went to them with all the necessary clauses. We have made sure that the one area that we have really improved as part of the turnaround is to have the right contractual clauses, and that is something that we have really tightened. And we are pretty confident about our delivery because this is based, because they have come and they have played around with our product and they were satisfied, and that's how we got the order. So I don't think there is any issue out there. But having said that, we as an industry, as a company, we are always paranoid. So we'll make sure that we deliver it extremely well.
Okay, that's very nice to hear. So, and how is this order structured? Like, it be executed over what period of time? You said 5 to 7 years. So,
Viraj, sorry to interrupt you. Your voice is not coming clear.
Okay, am I clear now? Hello?
Yeah, can you speak something?
I'm clear now. Am I clear now?
Yeah, a little better.
Okay. Sir, how will this order be executed? Like, can you explain me the execution of this order? Like, would be the SaaS income, then AMCs, or how? As a layman, if you can explain to me.
We have explained it earlier on this call. However, it is the normal contract like license sale and then the implementation. Then we get into AMC. So nothing different from any other. We just answered some previous caller on the same item.
So it is like 20%, 40%, 40%, and then the AMC. This is the way to look at the order?
Look, we would not like to go into further detail on that one. I think it's customer contracts we don't discuss, but it is the usual norm. Whatever was there, I think it is in the similar, what we said, in previous response. If you see, you will know.
And sir, this is another question. The last question from my side. Since we have turned EBITDA positive this year, at what level of order inflow will be PAT positive? Like, just your sense on it. I won't hold you accountable. Just it is a layman for me to understand the company.
So right now the turnaround is underway, and we are seeing green fruits at this point of time. We have seen some good wins, good contracts, and EBITDA has become positive. A lot of good things are happening. But we are not able to answer your question when it will get PAT positive at this point of time. Maybe sometime by end of this year we will be able to answer that. Right now we are not ready to answer that.
Okay, sir. All the best from my side and all the best to you. Thank you, sir. Thank you so much.
Thank you. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Manan Polaria from MKP Securities. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes.
Yeah. So, my understanding basis our last couple of calls has always been that expense reduction has also been a part of our turnaround strategy. And I think we've done quite well on that side. We've come down to 130 odd crores or so of run rate. My first question is an accounting question related to that. Is that the sort of run rate we should pencil in for the next 4, 8, 12 quarters?
I think you can take that as a guideline. There is a baseline run rate for the expenses if you're asking. Yes, you can consider that.
Oh, could you give me a mix of what percentage of that is fixed and variable?
No, we don't want to get into that at this point, but you can take the overall cost to be there.
Right. So my second question is on something that one of the previous gentlemen asked with regards to about 320 odd crores being the recurring book and 520 odd crores being the implementation, etc., one-off revenues. Given that we already have, I think, 188 million order book, is it?
Yes.
Is it possible to say that the mix of subscription as well as one-off revenue next year, since we already have that order book available with us, is it fair to give some sort of forecast with respect to mix and how much we will grow?
No, we don't want to get into the forecasting business because it depends on a lot of things. But what we would say is that our order book is healthy, and many of the customers we have won are the multi-country deals. It depends on where the deals pan out, where the implementations pan out, based on the customers, how they are working. So we would not like into getting into the forecasting thing, but all we can say is that our order book is pretty healthy and our teams are busy in executing those orders.
Right, sir. That's great to hear. Just one last question. If you have any internal targets of at what pace you would like to grow, I'm not saying this is a forecast or anything. If you could just give me whatever you internally feel and what you target for your team.
Yeah, that's why it is internal. We can't really disclose it. But absolutely, please believe me, we are a very target-oriented company. We have targets for everything. So that's part of the turnaround, right? How can you have a turnaround without a target? So we have that, but I can't really disclose it, unfortunately.
No, sir, I understand.
Not attention to 2-3 things here. I think Sundar said clearly, look into the healthy order book, recurring revenue, and EBITDA positive. You link all these things, you will know what we are saying.
Right, sir, I understand. Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to the management for closing comments.
Thank you all for joining the Q4 call of Ramco Systems. I hope you got a decent sense of our numbers. As we have mentioned earlier, this is a year of transformation for us. So our main focus will be on executing the orders that we have in hand well, making sure that customer satisfaction continues to improve, making sure that we also maintain EBITDA positive, and more importantly also ensure that the new products that we have launched gain good traction in the market as well. So we look forward to giving you more exciting updates in the coming quarters, but thanks for patiently listening and joining the call. Have a good day.
Thank you very much. On